Hello and welcome to the live trading hour brought to you by the Live Trade Room, where as we approach the US Open, we'll be looking to see if we can engage with these markets with a high degree of consistency in our approach, discipline with our capital, and there's some fantastic opportunities out there ever since last night. We'll get into the news in just a moment, so I'll explain why we're seeing actually a nice bit of momentum and volatility in these markets with clarity and direction. We've not had all of those things sort of come together recently. So let's get straight into it then. Please see our risk warning currently up on screen. Of course, be mindful of the risks involved in trading these financial markets. Make sure you know how to control your risk, know how much capital you're committing to a particular trade. Okay, so without further ado then, let's begin with a very brief review of some market moving news. Just want to make sure our squawk is currently running. Yes, it is. Turn it up a little bit. Okay, so let's get up FOREX Factory then. So yesterday we experienced a very significant market moving event. It's the FOMC. They've finally come to terms with the inflation story, it seems. And they're now beginning to look to increase interest rates for the markets to expect 2 interest rate hikes.
That the index publisher, the MSCI, is looking at the launch of crypto indexes.
So the FOMC are planning for 2 rate hikes over the course of the next 2.5 years by the end of 2023. They're acknowledging the impact that inflation is having on the US economy, which is we're likely to experience exceptional growth over the course of this year and next year. So what that means is it's always likely to put pressure on your riskier assets if we're in a rate increasing environment, and that's pretty much what we've begun to see. I don't think we've seen the full move by any stretch. There's probably a lot more pricing in to be done in these markets. So let's get straight into that's really the major play for these markets right now is very much central bank sentiment regarding increasing interest rates, which puts things like stock markets under a bit of pressure. I know there've been quite a few markets have been a little bit resilient, I guess. We could have easily seen a much bigger move to the downside, and we haven't been able to see that yet. So that was yesterday's news event. So how does this impact the markets? Most importantly, how do we interpret that information? And let's see what opportunities we have for you. So if we bring up... So in last night's trade plan, we were talking about continuation with this dollar strength trade. There was sort of 3 aspects to it. The dollar to strengthen across the board, and that's pretty much what we're seeing. Prices higher against the yen, lower against the pound. Prices higher against the Swiss, against the CAD. Lower the dollar strengthening against the Aussie, strengthening against the New Zealand. So we have now seen a lot of the price action that we were expecting to see. So we've had a significant pullback, but we've had a nice continuation move to the downside. So we look to see if we can prepare ourselves for some further dollar strength in the not too distant future. Not taking your eyes off all of these markets, but the euro pound is giving us a structural failure to the downside now as things currently stand. We do experience pretty significant pullbacks in this market, but let's see if we can close below that, and then that will give us some further opportunities to the downside. There is a structural failure here, as you can see, against the euro. So we're having this risk-off, flight to safety type market condition. So the gold is another one where we've seen, and it's largely due to that dollar strength trade. Yeah, good afternoon, Finbar. I hope you're keeping well. Did you get into any of these dollar trades or any of the gold or the indice markets at all, I wonder? So we're seeing this market continue to flush lower as a result of last night's FOMC. The crude oil market is looking to find a bit of strength, but really it's a case of just focusing in on the bigger opportunities in these markets. We are currently in the crude oil, the S&P, and the couple of the euro pairs. The euro dollar to the downside, the euro pound to the downside below that very important 85-80 level. So we are seeing these markets just be held up just a little bit. In fact, the Aussie is just flushing lower again. So too is the New Zealand. So these are all performing really quite well. So what we'll do is we'll technically go into each one, and we'll try and prioritize and just see which one is likely to give us the better opportunities at this point in time. Which is all you can do in any particular market condition. Brilliant. Dollar yen, New Zealand dollar to the downside, great trade. Euro pound, I assume lower. Euro dollar. All these for the dollar strength trade and the dollar CAD. Oh, the Aussie CAD. Okay. Short all except the dollar yen long. Brilliant. So you're really looking for that dollar strength trade, which is a fantastic trading opportunity, as you can see up on screen. So we'll look to see if we can add to these positions. Some are in slightly better technical positions than others, like the euro dollar is below the monthly low, so too is the New Zealand. Excuse me. The Aussie dollar is breaking below those levels. The CAD is looking like it's just bouncing off that monthly high, so we just want to be mindful as we approach those monthly highs. Perhaps just avoid, when you see prices going up to a level like this, just avoid selling just below it. What you want to do is look to buy above it. Just in case that becomes a little bit of resistance up at these levels. So we know what we're looking for. We're looking for dollar strength. Let's see where the opportunities lie. We can look at the smaller time frames. We had a nice flush to the downside yesterday. Very little kind of pullback really in this market. Let me get up our pen. Yeah, so we've got the dollar yen, the euro dollar, New Zealand dollar. Okay. So let me just check something off screen quickly. Right, okay. So let's have a look at these then as we approach the US Open. So we'll have an influx of capital coming in. So we have these little periods of kind of sideways, but our overall bias is to the downside, which of course is why we would be looking to plan for the next flush to the downside. So we want to try and remain objective. So let's take these lows in here. We'll take that high, and this is a momentum sort of breakout trade. So we look to enter below the 1925. I'm just going to make note of these. EU below the 1925 with a stop loss around the 1963. Okay, let's flick through the rest of these then. We'll see which ones are in slightly better positions. So flush lower, a lot of sideways moving markets, and then a little flush further to the downside. So below the 39.32, with a stop loss of the 140.07. We'll keep this moving along. Right, a bit of indecision really here in the dollar yen, largely due to the fact that the yen is a safe haven. So we're seeing capital come out of indice markets. In fact, let's just see if there's been any movement in the indices over the last little while. The S&P, yeah, it's just bouncing off those lows, isn't it, at the moment? The Nasdaq is doing the same. It's a fairly muted response really in some of these markets. Like strong retracements across these indice markets. So when we talk about risk off, it's quite fickle. So we're not sure if we'll get that out and out continuation trade, which is what we'd be looking for. So the sentiment has shifted a little bit in these indice markets. We come back to gold. Euro yen flushing lower, same as the pound yen. So we're getting that capital move to safety. We do like the euro pound to the downside as well. So let's continue to look for these opportunities. But perhaps the dollar yen probably isn't the highest on our list of high probability trades. So we get these kind of linear moves in a pretty short period of time. Just get that sort of grinding price action, and then within that you've just got really tight little ranges, as you can see. It looks like we're just entering another one just up here at these highs, and we've clearly been in one at these lows as well. So what we would probably like in some of these is a bit of a corrective move, just a bit of a sort of a natural pullback, maybe something to the 91.20 level perhaps. if we can see a nice natural pullback, then that can give us a decent opportunity in the dollar Swiss. And we're running up to the monthly high here at 91.62, so that might provide a little bit of resistance up at those highs. So again, this one looks like, and this is a little mini structural failure. It looks like in fact, that's what we're getting now. Up at these higher levels, we're getting this rollover price action now across these markets. So there's definitely a couple of high probability trades: euro dollar, pound dollar, continuation to the downside. And I think the Aussie and the New Zealand are probably marginally the better opportunities out of these. So we'll do a little bit of technical analysis, and we'll identify these opportunities, and we'll kind of clear it up in terms of where the opportunities lie and at what prices.
The German CDU chairman Lachey says Germany is at the end of the pandemic third wave. Says economic data is pointing to a positive German outlook as well.
Okay, that's positive for the euro. So the Aussie dollar, we can look for a pullback trade if prices can just tick higher up to these levels just in here. This is your pullback trade. Excuse me, it's really poor for PB, and then we can look to take that next leg to the downside. So we'll start building this opportunity. So the Aussie dollar, I'll put these up on the screen now in just a moment, so you can take this little trade plan away with you if you're looking for these opportunities. So somewhere like the 75.95. So it's a sell trade. The New Zealand is also another viable trade to the downside. We're below the monthly lows, you can see. Where are we? Yeah, there's your monthly low. So we broke through that yesterday pretty quickly. We had a significant bounce back, but now we're kind of seeing that little rollover trade. So now, where do the levels of support and resistance lie? If I can get another one of these over. There we go. So again, very similar to the Aussie, the New Zealand dollar. We can look for that pullback trade around the 70.35. But we're looking for a sell trade. So a little pullback after this like long extended move would be relatively natural. We like the euro pound to the downside as well. Perhaps we don't want to sort of confuse the trades in any way. We're getting a nice strong flush to the downside, and look how important that level is on the daily time frame. So it's those of you that are familiar with your technical analysis, this is regarded as a descending triangle. You have like downward pressure from above when prices get to these levels, and it happens on multiple occasions. And actually your trend line is probably closer to this little phase in here. Every time prices gets to that level, you see prices reversing on numerous occasions. So you know it's a strong bit of price action here. And now today, yesterday we were threatening it. We were thinking, right, well, we actually close.
Bank regulators raising their stability buffer up to 2.5% from 1%.
You can see that there's a narrowing of price action, and now today, only today, have we seen the actual flush trade to the downside. So we're below the monthly low as a result. So that's why this is a viable trading opportunity to the downside. So strong level of resistance just up at these very marginal higher levels, down at these lows. We attempted to get back to that level, but the mind you, if we look carefully enough, there's a bit of a structural failure in here. And what that means is these markets are showing to us that they're not able to reverse and push higher. This is when you'd expect these highs to be taken out and the market to actually put in a really strong reversal. You've also got the monthly low sitting at these prices as well. So if prices break above the 85.62, then we can expect a bit of a correction. However,
more from the German CDU chairman, says he's very optimistic regarding European and US relations.
However, what we've seen is the flush to the downside. We've broken below the monthly low, and we've seen a significant pullback. This is when we look like we're going to make the next leg to the upside, but this fails, and this is your structural failure trade to the downside below the 85.48 level. So the euro pound looking to sell below the 85.48. 85.48. Right, I think with all of these dollar trades, there's a viable sell trade in gold as well. But what we would like to do as well is to just keep a closer eye on the S&P 500 as a crude indicator for stock market reaction. Also, it might be worthwhile just you guys just acknowledging or referencing the 10-year note. So the 10-year Treasury yield pushes higher off the back of, I suppose, this tapering concern. So we've seen a very significant uptick in this from 150 up to current levels 1.75, but we've actually not kicked on. So we moved from this level. Okay, pre FOMC we're around 149, and now we're up at sort of 157, and prices are just hanging around these little highs now. So really there is a question to be asked, what next for the bond yields? Because if they roll lower, then we can expect to see stock markets push higher. However, the opposite is also true. If they continue their upward momentum, which is what we would expect, then we can expect further downside in the indices and further dollar strength and gold weakness. So that's how hopefully it all kind of begins to fit together. So this is our trade plan, and we'll put it all in one screen so we can monitor all these prices at the same time. So we want to monitor the S&P. What I'd like to do is put the pound, the euro pound, just because we're below that 85.80 level. And we're quite close to a potential sell trade in this as well. Okay, so the dollar pairs that we're going to focus a little bit more intently on would be the New Zealand dollar, right. We can just monitor these price actions and just see if we do get the follow through that we would expect. And the euro dollar just above it. So we put in the levels across these markets. So, okay, so let me put these levels in. So high probability. So the level is the 119.25. So this is our trade plan for the session. I'll just put this up here. There's your 119.25 level. Okay, so that's basically our trade plan for the euro dollar. We've seen a really nice move already. There's no reason to suggest that we won't see further flushes to the downside for the dollar. And well, we hope it'll be like that tomorrow and early next week, that there'll be, I suppose, a corrective phase in these markets. Anything can happen, of course, but let's see how we get on with that. Gold is due to pull back, Tim, to around 1809.
Meeting with Biden yesterday says the tone of the talks was friendly.
Let's yeah, the 1809, that's above these levels in here. Yeah, so these are, I suppose, some of your major. So when we trade, this is a major support, which then becomes resistance as prices break through. Prices fail to bounce back to the 1844. We get the flush to the downside, so this is support. It fails to break, so then it becomes resistance until we break through that level. So actually you want prices bouncing back to the 1803 ideally. Long move down, and we're currently at the 1787 level, so still a little bit more work to do in this market. You know, even like over an hour ago it was kind of pulling back, and we were entering the US Open, and we were thinking, right, well, if we sort of hang around the 118 level, maybe just a little bit above, and then we could get the little rollover to the downside trade off, but it's just kind of dropping for now. So we just need a corrective move, which is what we're waiting for across most of these markets. Actually, is that kind of corrective move. So yeah, that's the gold market. So let's put back up to New Zealand. So we might just get further flushes to the downside. That would be great for our euro dollar trade and our pound dollar trade if we get those flush trades lower. We are looking for a pullback with regards to the New Zealand and the Aussie dollar. So the euro pound wants to break below that 85.50 level, and maybe we'll see, excuse me,
we're 10 minutes away from the bottom of the hour, and the release
look,
of
there's
US
a little
and
bit of
Canadian data will be leading with US initial jobless claims for the latest week. Median estimate is for 359,000, the range 345 up to 370,000. That's against a prior 376,000. Continuing claims seen at 3.43 million. The range 3.345 million up to 3.48 million. That's against a prior 3.499 million. Moving on to the Philly Fed Business Index for June, expecting a modest pullback to 31 from a prior 31.5. The range 22 up to 40. Then moving on to Canada, international security transactions for April, prior read of 3.25 billion Canadian dollars. House price data due from Canada as well, the Terranet National Bank House Price Index. For May, a prior read of 2.4 on the month and 11.9 on the year. Also, we're awaiting the Canadian ABP employment change at the bottom of the hour. Not on the calendars, quite a volatile series as well. The prior increase for April saw 351,000 jobs added in Canada. And also possible comments from the ECB's chief economist Lane, taking part in the Barcelona GSE Summer Forum. ECB's website says there'll be no text from Lane. Has already spoken today as well via Bloomberg TV this morning. Going back to the US data, a note here from TD Securities. They're looking for jobless claims to fall modestly to 365,000 for the latest week, as they've been highlighting claims have looked too high to be consistent with both the layoffs and discharges series in the jobs report and the outflows from employment series in the employment report.
So that unemployment claims number, which has been dropping recently, we're expecting another sort of small drop of about 16,000 jobs, or should I say 16,000 people less signing on for unemployment, claiming unemployment. So that's a positive improvement. Okay. So you're looking at the four hour chart in the gold. Okay, so let's put this level in here. So where are we? We'll put so this is our high probability breakout sell trade below 139.32, 139.32. So we're looking for the euro dollar to actually flush lower below the 19.25, and we're looking for the pound to break out. It's a breakout sell trade, so we like to categorize our trades into kind of what the opportunity is. So the Aussie dollar, we're actually looking for pullbacks in these markets if we can get them. So at what price do we want this market to pull back to? We previous lows at the 70.39, so around the 70.35 would give us around the 70.35. These are all dollar strength trades. So this is a high probability pullback trade. Around the 75.95.
The German CDU chairman says tax hikes would be the wrong signal at this point. That does leave us just under 3 minutes away from US and Canadian data. We'll be leading with US initial jobless claims for the latest week, seen at 359,000. Continuing claims seen at 3.43 million. And Philly Fed for June, seen pulling back slightly to 31 from a prior 31.5. On to Canada, the international security transactions for April, prior read of 3.25 billion Canadian dollars. The Terranet National Bank House Price Index, prior reads of 2.4 on the month and 11.9 on the year. And we also expect the ADP employment change for Canada, prior read of 351,000.
Let's have a good look at the S&P 500 because there could be a really good opportunity here. Once we kind of break out of this little range we're in. You'd nearly always want these little gaps to be filled, but it doesn't look like that's going to happen. So this would be a breakout sell trade. Below the 42, it's actually the 4200 really is what we'd be looking to.
1 minute till data. We'll
high probability breakout sell trade.
359,000. Seconds.
Okay, so let's see what news we get out on the unemployment claims. It very well may move markets a little bit. A good one to gauge is the euro dollar.
12,000 for initial claims, 3.518 million for continuing, and 30.7 for the Philly Fed. Canadian international security transactions 9.95 billion. Terranet house prices 2.8 on the month, 13.7 on the year. So to recap, initial jobless claims 412,000, much higher than 359,000 expected. A very modest downward revision to the prior month, 375 from 376. Continuing claims higher than expected, 3.518 million versus 3.43 million expected. There was an upward revision to the prior, 3.517 from 3.499. Philly Fed 30.7 versus 31 expected. The employment component jumps to 30.7 from 19.3. Prices paid up to 80.7 from 76.8. And new orders 22.2 down from 32.5.
So that's a big miss there on the jobs number, the unemployment claims number. The jobs market in the US has been really quite strange post-COVID. But that's a sizable miss. That's the biggest miss since April's figure, early April. So little improvement so far this week with unemployment claims in the US. In fact, it's actually reversing. It's going the other way. So this is what we're left with. If prices flush to the downside for the euro dollar, we can get in below the 119.25. Same situation for the pound dollar, where we're looking for that breakout sell trade below that 39.32 level. The Aussie dollar, we're looking for a little bit of a pullback. It's only probably 16 or 17 more pips. Little pullback into this zone, and then we can take the next leg to the downside. The New Zealand dollar, expecting the same kind of pullback opportunity there.
And from Canada, the ADP employment report shows an increase of 101,600 jobs from April to May.
And it will be quite important to just keep an eye on the S&P, for example. It's currently sideways moving, which doesn't seem to be too surprising if you bear in mind.
And quite a revision to the April number as well, revised down to 101.3 from 351.3 thousand.
Okay, so okay, so this is effectively our trade plan. Okay, clearly a little bit of sideways moving patterns really right now across these markets. So what we want to do is obviously trade them if they move, and if they continue to move sideways, to try to be a little bit patient really. We had a good flush down yesterday. We had a good flush again during the European session, and now with some US capital, you'd expect, you know, actually more volatility to the downside for these markets, and we're not really seeing it just yet. So let's go with this market then. We do have another trading session now in just a moment, guys, so I'm going to let you go, but thanks as always for joining us. That's our trade plan. That's what we're looking to do. We're looking to sell the euro dollar. A breakout trade is fine. It'd be below the 119.25. The pound dollar, we're looking to trade this to the downside below the 39.32, so that next leg to the downside. However, the nature of the setups with the Aussie dollar and the New Zealand dollar with the flush lower is we're waiting for a constructive pullback. That level for the Aussie dollar is the 75.95 level, and the pullback level for the New Zealand dollar to contemplate a sell trade is the 70.35, just up to this level in here. The S&P is drifting sideways for now. We'll see what wins out, and we'd expect the euro pound to actually flush below that 85.48 level. So hopefully we'll get some good opportunities here still today, and it won't just drift into this sideways moving pattern. So look, on that note, guys, we'll have to wrap up the broadcast. Thank you very much for joining us. If you've enjoyed or benefited from the video, then do give us a thumbs up, subscribe to our channel, and we'll be live every day at 12:30. And if you click the bell function as well, you'll be notified when we go live. So you'll be very welcome to join us every day, or the days that you can join us. So on that note, thanks so much for joining us. All the best for the rest of the afternoon. Fingers crossed we will get these flush trades to the downside. We've had a few already. We're going to hopefully see if we can capitalize on a few more. Good luck with those trades there, Finbar. I'll be watching them carefully, and we'll see how we get on. Great stuff. Okay, on that note,
the CDU chairman says Germany must also return to stable budget policies after the pandemic.
Okay, so on that note, thanks very much for joining us as always. Do take care, and we'll speak to you soon. We'll be back tomorrow at 12:30 live. Bye for now.